Hello, my name is Billy and this is Vivy. So for those of you that do not know us, we created this channel to help real estate investors make better decisions through macroeconomic data and research. For today, I will mostly interview Vivy as she's one of the more, I would say, knowledgeable in terms of macroeconomics.
I'll try my best.
Yeah. And let's discuss a little bit. And I guess the first question that we want to have a big overview, right, as to what are some of the main factors that affect property prices growth in Singapore?
Yeah, I think most of us, when we look at a big spendings or in our spending pattern, we start with how the economic outlook. We read the news, what people say about how good, how bad the economy is. Then after that, we look at business. Is business making money? Is business shouting? Business is very hard to do. No sales coming in. It's slowing down. All that, or actually business is booming. You see people queuing up at the shops, at the restaurant, in the shopping mall, during a weekend evening, and then that is a sign that people are spending money. And then lastly is your wage, of course. You have a higher income, you have a higher wage growth, you tend to improve your cost of living, your standard of living. So these are the three aspects that actually basically affects in our spending pattern, especially in our property.
Right. And I understand that you have also prepared like this chart that shows the property prices over the past 20 years.
Yep.
So maybe you can also go through with us what is this pattern that we are seeing here.
Of course. So we talk about Singapore property price market. We know that real estate is an asset. It goes up the price. It accumulate or increase appreciating over the years. Whether it's a long period or short period, it depends on the type of the property. So there are some economic events that certainly affects the property price because of the consumer sentiment. So we have this chart which shows that the property price growth in Singapore for the past 20 years. So after year 2000, we actually see a spike in about somewhere 2005 or 2006. It's partly due to the inflow of the foreign investment into Singapore property market. Investors like Singapore, right?
Yeah.
Strong currency, good governments, developers are all reputable people. We don't see a lot of defaults in projects. So they see this is a safe haven for them to do a foreign investment. And then it actually driven largely by the United States because they are the booming of the housing market in the US, which we see a lot of people are buying properties in US. And then also the China real estate boom, which we see this is a chance, this is an opportunity that everyone who has cash goes into the housing market. Then we have this unprecedented global financial crisis happen.
We're now down 43%.
What in the world is happening on Wall Street?
Which lead to a downturn in the US housing market, eventually spread to the rest of the world. I think we all suffered during that period. We cannot get loan. We probably suffer a little bit of loss in the stock market. And then we have a collapse of the commodity price, a spike in oil price, gas price, everything. And then the most severe case is actually the bank failures, and then leads to economic downturns. Business are not making money, and then all the aftermath of this is actually a credit or tightening. So you get a lesser loan amount, you probably lose your job, and then the company is not making money. You see that a lot of people started doing part-time, they started worry about their life. And then what happened, all this is actually a loan default. You're forced to sell your asset. Investor in the home buyer settlement at that period of time is definitely at a low. There's very low demand in the real estate market, and the economics terms of rule, right? When there's no demand, there's no sales, the price is down. So you see that is this property price actually fell off a cliff because the demand is not there. There's no inflow of the money or fund into the housing market. In the late 2008, we see a rescue package including a stimulus and a bailout from the Federal Reserve of United States. The conditions are under control, but of course the impact are not salvageable. So those people who lose their job, they are not getting their job back immediately.
Yeah.
Those that have defaulted their loan get their house confiscated by the government, by the bank.
Yeah.
But the after event of this is actually a low or even a negative interest rate and an increase in the money supply by the major central bank, which includes United States, the England, and the European Union, because these are the countries that have first suffered from the global financial crisis. So of course this cascade into the rest of the Asia. We see a very low interest rate period in Singapore as well. And when we see interest rate this low, it actually attract home buyer or investor to come into the market again. So you see there's a sharp increase of the property price because the demand is coming back. People who probably not implicated that much during the global financial crisis still have cash reserve. They will go into the market at this period because buy low, right? Who do not want that? So the real estate market eventually grows steadily until the introduction of the ABSD, Additional Buyer Stamp Duty, by our local government, with the main objective to moderate the speculative buying behavior and also keep the housing price affordable for many Singaporeans. So this is actually a good initiative. It's beneficial to our people. So we still see that people are able to upgrade, they are still able to have a roof over themselves. They don't have to stay with their parents. Most can build a family outside of their original place that they stay. So I know that Billy actually done a study on how the real estate price actually versus the household income, which I think it will help a lot of our friends or our audience to understand, to finally resolve this myth. Can you afford the ever-growing price of the house in Singapore?
Just talking about affordability, right? Rather than just looking at what global events, market conditions that affect our property price, like the global financial crisis, like what Vivy mentioned, right? I think that was a very detailed breakdown as to how exactly what happened in the US so far away, right, actually cascade down into Asia. So I think that's very good on her part. But one of the main thing, right, that we actually observe is the correlation between property price and also average household income as well. So the chart that we're about to show here actually shows firstly the price index versus the average household income over the course of 20-year period as well. So starting all the way from like 2001 all the way to 2024, we noticed quite an interesting pattern. So if you look, let's say even before 2001, right, that was kind of like when you see this dip in the graph, we kind of say the real estate market is kind of going down. And when the income, right, which is the one at the green line, starts to go up as well, we saw that actually the private property price index also started to go up in tandem as well. So there is this resilience in terms of our property price growth, partially due to the fact, like especially during the 2008 financial crisis, yes, there is a little bit of a dip in terms of our property price and in terms of our wages growth, right? But I think at that point of time, the government support for the jobs actually cushioned the Singaporeans' income very well. That was probably one of the main reasons why people are not a lot of, we are not seeing like large scale default of mortgage, which did not translate into people trying to sell their homes like below value. So I think that was a very important cushion over there. Wages still started to grow as well, all the way past like year 2009. And then right, when you see a line that cross over the average household income crossing over the residential price index, that is kind of also the time where the ABSD, the cooling measures actually started to come in.
Yes.
So we kind of know that the government is also watching like these two levels of correlation pretty well as well. And when they find that when houses are starting to become less affordable for the locals, that is where they introduce all the different ABSD measures and other cooling measures to come in also.
Yeah, and actually from this we can, just from the chart, I think we can actually see that the ABSD is actually effective in terms of keeping the price affordable for the local residents, and especially when among a majority of the locals Singaporeans are actually staying in the public housing. Of course, we probably least affected by the growth in the residential market, but still we want to know whether our assets are actually appreciating, right? So that we have a chance to shift to a bigger house or probably upgrade. So from this, we look at the residential perspective, whether it's a private or staying in the house HDB right now. It's a very strong sign, a strong signal that your household income can definitely afford the markets. So we all started from where we are, and we can actually afford this upgrade in the standard of living. So the next one, which I also prepare, this is actually the inflation's perspective. So when wage growth, we increase our salary, we reward ourselves, right?
Yep.
We buy new clothes, we buy new car, we go holiday, we probably upgrade from economy to premium economy, or eventually we get to see a business class, all kinds of spending to elevate our quality of life.
Yeah.
So house is where we will be at most of our time, and especially after COVID, we see a shift of the pattern that people spending more time at home, probably for either for weekend recreations or work from home. And even for schools these days, they advocate probably a one-day study from home, a home learning kind of environment, a home learning kind of methods. So we see a shift in this. So definitely people, if they can afford or they have the chance or opportunity, they will upgrade their house, right? Their where they stay. So we have these charts that show that the price index against the consumer price index. Of course, we minus off the accommodation. We don't want to give you a feel like we are actually blending the thing in to show you that actually all is moved in tandem. But actually, if you look at this, when our spending patterns increase, our increase per se, so it did not just drive the property price. You see that the consumer price on the household expenditure also increased. And this increase actually is steadily moving upward, even during the economic downturn. We can see the most prominent is actually during the 2008 and 2009 financial crisis.
Yeah.
We may control our expenditure a little bit because we are about our job security, right? No job, no house, nothing.
Yeah.
So we control a little bit, but we still see that we spend whatever that we probably think is necessary.
A bit more frugal lah.
Yeah, correct. And then when we move on to COVID period, the CPI is even way above the roof. But of course, that is because the limitations of the things that we can have, like in our usual life. We probably have to pay higher for even household necessity. We probably have to pay higher rental for some of our foreign tenants who ended up grounded here, not able to go back to their home country. They want a better better place for their work from home kind of setup. They choose a better place, but our salary is not affected during this period. Of course, our government has put in a lot of effort in ensuring our wage, our jobs are still there. So all in all, the covered in the very first initial thing about 3 factors that affect our home choice, our property purchase decision, economic outlook, household income, and the spending pattern, which is inflation data. All this has pointed towards a very positive outlook that the data proves that we are moving towards the direction that all this is the consideration point.
Yeah.
Yep.
And probably it's not, we can't just use like one singular event to say that, oh, this is the factor that pushes down the price or increase the price. The habits of us as agents, we also tend to be a bit more frugal as well. Like we kind of sense maybe the economy is not doing very well.
Then we start to save a lot of
we will
money.
save a little bit, you know, and all that. Also during the COVID period, I remember very vividly, like all the costs along across the board, right? Cost of everything like the house and all that also went up as well. So I think we all felt like, you know, we wanted to be a bit more conservative in terms of where we are spending, but at the same time, we still see property prices booming up in that period. So I guess there's also like there's a pent-up demand that people want to move up of their homes also, right?
I think during that period is also a demand over supply thing
Yeah.
against the economic times of rule, right? The supply is really limited during
Yeah.
that periods. The manufacturers are not producing new things
Yeah.
or in a slower pace, and then we are all staying at home. In fact, we consume more
Yeah.
than we used to spend time in 8 to 5 in office and only stay at night. And weekend we don't go out, so we consume a lot of things within where we grounded, which is our house. So we start to buy new furniture, new work desk, new computer, new phone, new everything. So all this is to sort of comprehend or compensate why we are grounded, but it's a sign that we are increasing our quality of life. And all this point to like what Vivy has said in the end of the day, the property price will be affected by all this event, whether it's a pandemic, a financial crisis, but fundamentally it's still appreciating assets. And as long as we have a job security and also the steady wage growth, I think every one of us can afford the property and house in Singapore that we can.
Yeah. Yes, in summary for this video, since the start, we covered a brief history about how the Singapore property prices trend over the last 20 years and how events like the global financial crisis actually affects our property price or not. But as we begin to look even further, we discover factors like the household income, average house, and the consumer spending, which what you shared also is actually plays a larger role in the price growth. So we can't just look at one singular event. And I think it will be interesting for us for our next video, how we can actually predict
Crystal
in a sense.
ball.
Of course, we can't tell the future, but based on what we learned in the past, right, I think we can also prepare ourselves, especially in today's economy where people are kind of unsure. I would say unsure maybe is the right word, about whether to be frugal or you want to spend a little bit more. How you should actually prepare yourself, right?
So we'll have all this lined up and follow us. We will also show you what are the opportunity outside of Singapore, given the strong currency we have right now. What are the things that we can explore outside of Singapore, and also how can we plan our purchase during this troublesome period.
And I think it's important to also let us know what you would like us to discuss as well in the comments, and to be up with our videos, you can also subscribe to our channel. And let us know what you would like to see next as well. And I think this is it.
See you next round.
See you. Bye bye.